gentlemen, good day and welcome to Satin Creditcare Network Limited Q2 H1 F24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Aditi Singh, Head Strategy of Satin Creditcare Network Limited. Thank you and over to you, ma'am.
Thank you, Malcolm. Hello, everyone. Good evening, and thank you so much for taking out time to come and listen to our results highlight for this quarter and half year. One thing I would just like to request is, since we are in the middle of a fundraise activity, it will be not possible for us to give any futuristic guidance or commentary. So I'll request whoever wants to ask a question, please refrain from asking any futuristic comment, guidance or questions, and otherwise we are happy to clarify on any number or any clarification that you may have. With this, I request Mr. H.P. Singh, our Chairman and Managing Director, to give the opening remarks for this earnings call. Over to you, sir.
Thank you, Aditi. Good evening, everyone. Thank you for coming on a Friday evening to attend our earnings call for Q2 and H1 FY24. I trust you've had a chance to review our quarterly results and investor presentation. If you haven't had the opportunity yet, you can access them on our website or through the stock exchanges. I'll start the discussion on our Q2 FY24 performance with a word of appreciation for our board of directors, customers, employees, and all stakeholders for their unwavering support, perseverance, and confidence in our brand as we complete 33 years of existence. This is the 34th year of our remarkable journey, which thus far has been nothing but a resounding testament to our unwavering commitment to transforming lives and promoting financial inclusion nationwide. The first half of FY24 reflects our consistent and robust growth momentum and sustained profitability, as is evident in our performance across all operational and financial metrics, sustained business momentum, and constant improvement in our asset quality. Consequently, we have concluded yet another quarter marked by the highest ever profitability in the past 5 years. We had a healthy disbursement for the quarter of rupees 2,403 crore on a consolidated basis, up by 41% year-on-year. We are laying emphasis on acquiring new clients, and first cycle clients account for 49% of AUM as on Q2 FY24. Significant pickup in disbursement led to a 33% year-on-year growth of AUM, which now stands at rupees 10,100 crore on a consolidated basis. Coming to standalone numbers, we have been able to make strong net customer additions of 4.1 lakh in H1 FY24, which stood at 29.7 lakhs in Q2 FY24 as compared to 25.6 lakhs in Q4 FY23. It makes me really happy to share that we continue to be one of the most preferred financial partners to a large number of low-income households across rural India, and at the time of disbursement, approximately 31% of clients have Satin as the only lender. We opened 17 branches in the quarter, taking the number of branches to 1,115 as on 30th September 2023. The on-book GNP of the company stood at rupees 157 crore, which is 2.38% of the on-book portfolio, down from 3.96% as on September 22. The company has sufficient on-book provisions amounting to rupees 124 crore as on Q2 FY24, which is 1.89% of its on-book AUM. During H1 FY24, collection against write-offs was around rupees 28 crore. This is a result of our field team's persistent effort to collect back our card loans. Gross cumulative collection efficiency for H1 FY24 stood at 99%. During the reporting quarter, we maintained the trend of our healthy collection and excellent asset quality. The performance of the new portfolio originated from July 21 onwards is performing impressively, which constitutes about 96% of the on-book MFI portfolio, with PAR 1 at 1.5%, and PAR 90 at 0.7% as on 30th September 2023. As per the report by CLIF IMARC for the NBFC MFI, PAR 1 stood at 5.8% as compared to 4.4% in Q1 FY24. The same trend is seen in Power 90, with NBFC MFI's Power 90 stood at 3.6% as compared to 2.6% in Q1 FY24. This demonstrates the effectiveness of our underwriting processes. I am happy to state that the company has raised around 33,000 crore in the last 6.6 years with an absolutely clean repayment track record with no delay of leak default since inception, indicating our financial stability and the confidence of the market in us. Coming to the numbers of H1 for this year, we raised 4,848 crore, which is up by 93% year-on-year. Of the total funds raised during the period, around 76% was on-book borrowing. Further, the company has a healthy CRAR of 25.7% and sufficient liquidity of around 1,400 crore as on 30 September 2023. Our consolidated book value stands at rupees 191 per share. Our PAT grew 89% year-on-year to Indian rupees 103 crore during Q2 FY24, marking the highest ever profitability in the second quarter. This has resulted in an ROA of 4.7% and ROE of 19.7%. Overall, looking at our H1 FY24 financial performance, we are in line with our annual performance guidance for financial year 2024. Along with the strong performance of the company, I would like to share a key development that took place this quarter. Under the Category 3 of Assam Microfinance Incentive and Relief Scheme 2021, AMFIRS scheme, the company received the first tranche of 10.70 crore from the Assam government, reflecting the government support and their promise of ensuring creditworthiness among lakhs of people. We would also like to inform that our inherent adherence to ESG, environmental, social and governance principles, and our strong compliance standards have helped us to secure AA rating, the highest grade rating from ESG Risk Assessment and Insights Limited, a subsidiary of Equity Ratings. We are the top company in the industry, securing the highest rating. This highlights our dedication to sustainable and responsible business practices, which is increasingly important in today's business landscape. Over the years, our IT team has been giving us relentless support, enabling us to establish sustainable and innovative solutions that champion eco-friendly practices. Our digital solutions streamline processes from customer onboarding to loan completion, eliminating the necessity for physical paperwork, and I take pride in sharing that the company has gone paperless in its operation across the nation. Moving further, our company has garnered several prestigious awards and accolades that acknowledge our commitment to excellence across diverse domains. Notably, we received the Corporate Excellence Award at the Making India Employable Awards and Conference, recognizing our significant contribution in employment generation in India, notably for the unskilled or lesser skilled labors. In addition, the company also got recognition by the Indian CSR Awards under the category Most Impactful Scholarship Program Initiative of the Year 2023, underscoring a positive impact on multiple student lives. We believe our conviction, passionate workforce, experienced board, and healthy asset quality will help us achieve sustained growth and ensure the overall development of all our stakeholders. Giving you the financial and operational highlights of our company, starting with the consolidated highlights, our AUM as on 30th September 2023 stood at 10,100 crores. We have a customer base of 32.1 lakh as on 30th September 2023, with presence across 1,335 branches in 96,000 villages and 412 districts of India. Our top 4 states contribute to 54% of total AUM Q2 FY24, and the states are UP, Bihar, West Bengal, and Punjab. Our disbursement for Q2 FY24 stood at rupees 2,403 as compared to 1,709 in Q2 FY23. The total revenue for the quarter stood at 530 crore, up by 49% year-on-year. PAT for the quarter stood at 107 crore, ROA of 4.8% and ROE of 23.6%. Now coming to standalone highlights, our AUM on 30th September 2023 stood at 8,894 crore. Our standalone disbursement for the quarter stood at 2,202 crore as compared to 1,564 crore in Q2 FY23. Our average ticket size of MFI lending for H1 FY24 stood at 45,000 rupees. We have a well-diversified customer base of approximately 29.7 lakh clients with 76% rural exposure. On-book GNPA reduced to 2.38% as on September 23 from 3.96% as on September 22. In absolute terms, it reduced from 198 crores to 157 crores. As on 30th September 2023, 96.4% of our districts have less than 1% of our portfolio exposure. Our well-thought-out diversification strategy has enabled us to sail through difficult situations and capitalize on our idea of enriching our client life through financing of various products. We have disbursed around 80 crore during H1 FY24 under the product finance category, which includes loans for bicycles, solar products, home appliances, consumer durables, and water and sanitation. An update on subsidiaries. Satin Housing Finance Limited has now reached an AUM of 567 crore, which grew by 57% year-on-year, and having a presence across 4 states with 6,028 customers. SHFL has a 100% retail book. The quality of portfolio remains intact with GNP of 0.79% as on September 23. The company has 22 active lenders, including NHBD Finance, CRAR of 51.5% and gearing of 2.2x. PAT for Q2 FY24 stood at 1.9 crore. Satin Finserv Limited, the company's MSME and BC lending arm, has reached an AUM of 638 crore, CRAR of 51.6% and gearing of 0.9x. PAT for Q2 FY24 stood at 1.4 crore. In conclusion, as we journey along the path of expansion, we stand ready to embrace increased profitability while maintaining cost efficiency. With this, I would like to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Samir Bliss. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats team on a strong set of numbers. As I can see, sir, our OPEX is probably at a multi-year low as a percentage of AUM. Can you just elaborate what is driving these efficiencies and productivity in the business?
So I think what we are trying to actually re-engineer post our COVID debacle, whatever happened is that we got ample time to look at optimum efficiency in terms of our loan officers. We re-engineered our processes through matrix of various scorecards, various processes in terms of acquisition of a customer, collection of a customer, as well as disbursement to a customer. I think that probably is also bringing in the required efficiency in terms of the growth as well as disbursements. Also, we are looking at various other metrics in terms of center efficiencies, in terms of increasing our additional clients which are getting attached to the centers to improve the number of borrowers per center. I think that is one of the key calls which we are trying to take in, and various other underwriting capabilities, which are probably now emerging out once all this re-engineering has started to happen. Just to add, I think, we are also focusing a lot on our in-house built software. So technology capabilities probably also give us a lot of impetus in actually looking at data analytics to take calls much more faster than we are able to do in terms of having not this kind of a capability process. So all these probably lead practically to whatever operational efficiencies are probably kicking in for the institution.
So when I look at GLP per branch, where do you think probably the metric stabilizes from a 18 to 24 months perspective? We are at roughly 7.7 crores of AUM or GLP per branch.
Samir, it's again, I think futuristic. We probably will not be able to give you a guidance on that. But I think, what we are trying to look at is, I think, to improve our efficiency. That is what generally from here on in terms of even the branch matrix also, So it's the complete parameters, the center efficiencies, the loan officer efficiency, the branch efficiencies, So all this is combined into one in terms of driving that optimum efficiency.
Okay. And what is the quantum of amount remaining from the Assam relief scheme?
I think our guess is that we've got still about 100 odd crores, which probably will be coming in the future tranches which are going. This is the first tranche which has come in. The balance 3 tranches have to still come in. There are a total of 4 tranches which will be there, and this was probably the lowest one because this was till the overdue. In terms of the ticket, I think it was about 25,000 rupees, which was the first go. I think there's going to be an increase from now for the further tranches which will come in.
Okay. Great. This is good. I'll come back in the queue if I have further questions. Thank you and all the best.
Thank you so much.
Thank you very much. The next question is from the line of Nidesh from Investec. Please go ahead.
Thanks for the opportunity. So, first question is on customer acquisition. The incremental customers that we are acquiring, what percentage of those customers are new to credit, new to microfinance sector?
New to credit, I think technically would be about 20-odd%, which is going to be there, which we technically call a no-hit customer. That'll be close to about 20-odd%, and I think that is probably the ballpark figure which is there. We don't have the exact decision, but this is closer to what we think, is the ballpark acquisition of a no-hit customer.
Sure. And secondly, the entire sector is seeing pretty strong growth. Most of the companies are seeing asset quality, quite stable asset quality. But are there any steps that we are taking to prepare for further shock events in microfinance which may happen in future? So in terms of provision build-up or in terms of some processes or cutting down on some geographies, are we taking some steps to prepare ourselves for further shock events whenever it happens in the sector?
So I think it's a combination of both geography as well as the matrix of financial portfolio, the ECL mechanism, which we are trying to create a buffer. As we had said earlier that we will create a buffer, we started to create a buffer. I think that buffer has been created in this quarter in itself. Besides looking at the way we are looking at the acquisition of our customers, so it's not. I think the mantra is not just to disburse, but the mantra is to collect. I think that is probably our prime focus, and not leaving the growth to chance. So I think whatever steps we taken in terms of our underwriting capabilities, whatever steps we taken in terms of the geography where we are present, whatever steps we are taking in terms of our deep diving into the existing geographies, all that put together, including creating the buffer into our financial accounting system, basically to do that. I think that probably is going forward in that direction where we are building a buffer for ourselves in terms of both the portfolio quality as well as the accounting treatment as such.
Sure. And last question is that we have incubated 2 subsidiaries. One is SME loans for our graduating customer and housing loans, affordable housing loans. So are there any plans to add any more lending products in future?
No, I think our hands are full. We want to, now, focus on these 2 subsidiaries of ours and build up those subsidiaries. As we said, that this is where we are looking at. This is our focus, So the holding company and 2 subsidiaries, basically, this is what our focus is. No further this thing, for us to look at into any other product.
Okay. Thank you, sir. That's it from my side.
Thank you. Thank you so much.
Thank you very much. The next question is from the line of Suyansh from Biz Enterprise LLP. Please go ahead, sir.
Congratulations on stellar results, sir. It might be naive to ask these questions as I'm new to this company. Having said that, after going through presentation, it seems you have implemented best-in-class compliances system and processes in place. So, my question is, as it said that you are disbursing loans 100% digitally. So, do we turn off the customers who don't have bank account, or we try to help them opening those bank accounts?
So we try and help them by opening the bank accounts, but no disbursement is made in cash. It is 100% into the bank account. So wherever if a customer doesn't have a bank account, we facilitate them to open up a bank account.
Okay. So, and one question is that, seeing the trend, the whole micro finance industry is in up cycle. But do we see our cost of borrowing going down? I'm not asking for guidance, but in trend, can that happen?
It's again futuristic.
We can't answer that.
Okay. And one last question is that, sir, we are seeing that PM scheme, Swanidhi schemes, the public sector banks are financing through those channels. Are we also doing that, or are we using those data to finance the customer?
No, microfinance customers is a huge base for ourselves. I think, for us to look at any other possible segment, I think, doesn't hold good, So for us, it's a huge base, which we cater to. So I think, we probably do not have, to look at the other segment, which is there.
Okay. Thanks for the given opportunity.
Thank you.
Thank you very much. The next question is from the line of Prabhu Sharma from Lakhoda Investors. Please go ahead, sir.
Hello.
Yeah, we can hear you.
Okay. नमस्कार सर. सर, लास्ट 4 क्वार्टर्स में अपन ने 350 करोड़ पैट जनरेट किया है. ओके. और सिंस 2008 से अपन ने इक्विटी कैपिटल रेज किया है 1287 करोड़. ओके. And net worth as on date around 1900 crores. Okay. तो सर मेरे को ये जानना है कि ये 15 साल में अपन ने केवल 263 crores net worth ऐड किए बाय प्रॉफिट. तो ये सर आपको थोड़ा साधारण नहीं लग रहा?
आपको शायद अगर आप फॉलो कर रहे हैं माइक्रोफाइनेंस इंडस्ट्री को तो 3 क्राइसिस हो चुके हैं प्रैक्टिकली. 3 क्राइसिस में डिमोनेटाइजेशन है, असम का क्राइसिस है और कोविड का क्राइसिस है. तो उसमें काफी राइट ऑफ्स हुए हैं और उस राइट ऑफ्स को भी अगर आप जोड़ेंगे तो आपको ये फिगर उस तरीके से नहीं दिखेगी जिस तरीके से आप उसको देखना चाह रहे हैं. तो एक बार वो आप देखेंगे तो तब आपको क्लियर पिक्चर दिखेगी.
ओके. सेकंड क्वेश्चन सर, एमएसएमई पे आपने लास्ट इन्वेस्टर मीट में गाइडेंस दिया था 50% ग्रोथ का, जबकि इस क्वार्टर में डी ग्रोथ हुआ है अपना बुक्स इस हाफ में. तो आप अपनी ये ग्रोथ गाइडेंस पे स्टैंड कर रहे हैं सर फ्यूचर के लिए?
तो प्रभु जी, अगर आपने प्रेजेंटेशन देखा हो तो एसएमई पोर्टफोलियो ग्रो हुआ है. उस कंपनी में कुछ बीसी पोर्टफोलियो था जो रन डाउन हुआ है. एंड द रीजन इज दैट now when the company has become an NBFC, it cannot have too much of non-interest fees, non-interest revenue. So BC revenue is non-interest revenue. So for the principal business criteria, meaning you have to have 50% or more as interest income. That's why we are running down the BC book, but retail MSME is growing.
कितना % ग्रोथ हुआ है मैडम क्वार्टर ऑन क्वार्टर?
So quarter on quarter we have grown by around 25-30% because we are stabilizing the infrastructure first.
Okay, best of luck madam. Thank you.
Thank you.
Thank you very much. The next question is from the line of Bhuvnesh Garg from Investing Capital. Please go ahead, sir.
Yeah. Good evening, sir. Congratulations for good set of numbers. And just one question from my side. So I was looking at the presentation. So though our GNPA has increased, improved QQ, but our PAR 1 that seems to have increased by 20 bips from 3% to 3.2%. So if you can throw some color on this, that what led to this increase and in which states you are seeing this trend. Some color on PAR 0 trend. Yeah.
There is just a marginal increase, and if you look at industry PAR 1 has grown by 100 bits. So looking at that, it is a natural phenomena of marginal, and it is not state specific as such. It is just the more the portfolio is getting seasoned. Any which way we have in past also, if you look at the commentary on microfinance, you can see that everyone is commenting about 1.5 to 2% kind of an overall credit cost. And while we are not in a position to comment, but we will try to overachieve on this, do better than that. So 20 bits is a normal...
the baseline technically is that the industry is talking of about 1.5 to 2% credit cost. So I think, the natural phenomenon as you grow alongside basically, I think, this is what the credit cost is going to materialize, the idea is to overachieve, what the industry is performing at.
Yeah, got it, sir. Yeah, thank you. That's it.
Thank you very much. The next question is from the line of Puneet Daga from BT Capital. Please go ahead, sir.
Hello. Am I audible?
Yeah, you are.
Yeah. So I have two questions. I wanted to understand, I could see the cost of funds rising by around 1.13% on a sequential basis. So could you just throw some light on why it rose by such a high quantum?
So, please do not see the finance cost on a standalone basis. Probably NIM is a better reflection of margin because cost of fund does not take care of the cost on the direct assignment transaction. But if you see our NIMs, which are consistently being constant and improving quarter on quarter. So for the half year, the NIMs are broadly at 12.81% is a right reflection of margin rather than seeing only the cost of fund.
Okay. And sir, my next question is on this component of other income, net derecognition of financial instruments. I am seeing this component on a sequential basis rising by around 42 crores. So over the past few quarters also I am seeing this component being very volatile. So could you just explain what this component is and why it is being so volatile?
So, as per NDS, when we do the direct assignment transaction, which means we sell some part of our portfolio to a investor, and we transfer the entire risk and reward to the investor. So as per the standard, we have to book the income at that point in time. So depending upon the quantum of direct assignment done during a particular period, there's a little bit of up and down. But if you see the number on a half-year basis or 9-month basis, that will give you an average kind of income. But quarter-on-quarter or period-on-period movement is depending upon the number of or the volume of direct assignment transaction that we do.
Okay, so further on, also, are we expecting it to be volatile in a similar manner or like the way it is, or we could see it stabilizing around current levels?
So again, we may not want to give a futuristic guidance, but our direct assignment portfolio is probably 25% of the total AUM for the last few quarters. So this is where we are.
Okay. And sir, the last question is on the Assam write-off book. We have written off around 1,000 crore book, and previously I read that there was a guidance that on a yearly basis we would be recovering around 50 crores on a yearly basis. And now, during the call, you had mentioned that we are expecting around 100 more crores from the Assam government. So, sir, I was not able to understand this part. Could you just throw some light on the same?
So for this quarter, we have received net 10.7 crore from Assam government, and this was a clear cut. Whosoever was there, less than overall 25,000 rupees indebtedness, government has paid the entire amount. Going forward, depending upon how the government will decide, etc., means it is slightly challenging to very accurately estimate the payout from government. But this is the kind of money that we have to get for that period. So depending upon how the government will decide, the amount will come.
And Puneet, I think you are confusing two things. 1,000 crore write-off was not on account of Assam, neither was the 50 crore recovery against write-off. That was the overall write-off of the organization. Assam was a part of it, but not this huge. The 100 crore that we say is Assam-specific number.
Okay, so could you just, what was that 1,000 crore write-off, including what all things I just didn't get you? Could you just repeat once again?
So that's the complete write-off of the organization for the COVID period.
That was the COVID hit.
Okay.
COVID hit for Satin was almost 1,000 crore. Okay. Assam, we are expecting around 100 crore, which is the Assam-specific hit.
Okay, so we have basically written off our book for about 100 crores. This is what you are trying to say, right?
You're confusing yourself. It's not that we have to recover from the government technically about 100 odd crores. No, that is what we are saying.
Okay. Thank you, sir.
Thank you.
Thank you very much. The next question is from the line of CA Kawaljeet Singh from Balaji Fin Investment. Please go ahead.
Good evening. Congratulations for the good set of numbers. As you have updated on BSE that you will increase your authorized capital and preferential capital also. So what is the thought process on this? Is there any QIP inside or any rights issue?
So, we have not done any change in the preferential capital. That was already part of our existing authorized capital. We have increased the equity capital by adding 2 crore more shares. So that is a change in the authorized share capital. Our board has approved and we have already informed the exchange that board has given us authority to raise up to 300 crores through various channels, and we are evaluating our options. And then we'll keep through the stock exchange informed everybody about our progress there. So this was an enabling resolution in our 19th October board meeting, and board has given us power to raise up to 300 crore of equity or equity-related instruments. So whichever channel we want to, so we are evaluating our options.
Okay. So the capital adequacy is already at 25.7. So is there any need at this juncture to increase any capital? You can increase that capital when you get a good price for that. And having that kind of a capital adequacy, you should not go for a new capital at this stage.
Well, probably that's a business call, which we take technically. I think, that is what we feel that right now, we feel it's probably the right time to raise growth capital for ourselves. I think that's the call which the business demands it, and that's the call which we're taking.
So you are going for a QIP?
The instrument, as Jugal mentioned, we are still evaluating our thought process.
Okay. So even that will be a good thumbs up from the market. Thank you. Thank you very much.
I can't comment that. Anyway, thanks. Yeah.
Thank you very much. The next question is from the line of Pranav Gupta, who's a retail investor. Please go ahead.
Hi. So I say congratulations on a great quarter, first of all. And I was wondering, you guys mentioned that we're doing a fundraise. So what is going to be the use of these funds? Is it for growth? Is it for working capital? And how do we see this impacting the top line?
So this is a growth capital. We are, want to evaluate and raise at an appropriate time. As we have seen our performance for the last 5-6 quarters, the business is coming back on track. So we feel that we should evaluate a capital raise at this point in time. Of course, a better capital will have a better impact on the overall performance of the company, on rating, cost of fund, etc. So those things will happen in due course of time.
Okay. Thank you.
Thank you.
Thank you very much. The next question is from Rishikesh Oza from Robo Capital. Please go ahead, sir.
Hi. Thank you for the opportunity. So my first question is, we have seen a spike in revenues for this quarter. Is there some one-off in this, or is it sustainable?
So there's no exceptional item. We keep doing the direct assignment, which is a regular part of our fundraising strategy. But there's no exceptional item.
Okay, so we can see a quarter-on-quarter growth on this base?
So again, talking about futuristic is slightly challenging at this point in time, but you can see the past trend, and then we can clarify that in case there is any question around that.
Okay. Also, my next question is on credit cost. Currently, you said 1.5 to 2% credit cost at industry level. Just wanted to get a sense of what sort of sustainable credit cost do you see for next, 1 to 2 years?
Again, futuristic, Rishi here.
There is a slide where we have talked about the guidance that we gave in September during our analyst day for the FY24 estimating. You may refer to those, but again, we will not be able to comment on another 2 years or so.
For the sake of repetition, just wanted to emphasize that the regulation does not permit us to speak about futuristic at this point in time, and that is why we are not clarifying some of these issues. But in the past, we have done that. Plus, regulatory can please replicate that.
Okay, no problem. Thank you.
Thank you.
Thank you very much. As there are no further questions, I would now like to hand the conference over to Ms. Aditi Singh, Head Strategy, for closing comments. Please. Go ahead.
Yeah. So thank you, everyone. You took our time and came to our call, listened to us. Thank you so much. I wish you all have a great weekend. We have tried to answer whatever we could, limited by the regulations that we cannot comment on futuristic any views. But still, if you want to discuss anything, you can reach out to me or to my colleague, Ms. Shweta Bansal from the Investor Relations team. I wish you great festivities. Diwali is around the corner, so I will say enjoy and may you and your family have a great festive season. Thank you.
Thank you.
Thank you very much. On behalf of Satin Creditcare Network Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.